This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
Late day dives, heavy selling into the close of trading sent the Dow down more than 200 points. Its worst three-day loss in almost 3 years.
Buckle up, banks and technology companies, two of the most heavily weighted sectors in the S&P 500, out with their earnings this week. So how will a nervous market react to the results?
On the radar, what the Federal Reserve and global central bankers are concerned about now. We have all that and more tonight on Nightly Business Report for Monday, October 13th.
Good evening, everybody, and welcome. Columbus Day was no holiday for stock investors. They sold off again and hard again. The usual stew of recent worries gets the blame: slowing global growth, ISIS, Ebola, and now corporate earnings. They start flooding out in earnest beginning tomorrow. Today's sell-off accelerated in the final hour with no discernible trigger. But as the major averages broke through some technical levels, investors pushed the indexes even lower. At the close, the Dow had tumbled another 223 points, most of the slide coming in the last 45 minutes. The Nasdaq down 62, the S&P 500 down by 31. Blue chip Dow stocks now at a 6-month low, Nasdaq and the S&P 500 at 5-month lows. Now, besides earnings season kicking into high gear, what else is causing all that turmoil in the markets? Bob Pisani takes a look at 3 things investors are watching closely this week.
We are entering the heart of earnings season. About 75% of the companies in the S&P 500 will be reporting between now and the end of October. Several banks report this week. For big nationwide banks like Bank of America and Citigroup, traders will be looking to see if trading volumes for bonds and stocks have bounced back. But for the average bank, the key to this quarter is loan growth. There's been some concerns that loan growth is slowing down, particularly in commercial and industrial loans, that drove a lot of the positive comments from bank management last quarter. Now, one disappointment for banks is that interest rates still are not moving up. Higher rates would help banks because they'd be able to charge more for their loans, but that isn't happening yet. The second event to watch is signs of more weakness or stability in Europe, where the economic data has been poor recently. We'll get industrial production numbers in the Eurozone tomorrow. The good news is that if Europe continues to get weaker, there's little doubt the European Central Bank will step in with an aggressive stimulus program. Finally, and this is the biggest wild card of all, further outbreaks of Ebola could affect trading. The Center for Disease Control has said they are concerned about other infections potentially in the coming days, especially following the infection of a healthcare worker who treated the man who died from Ebola in Dallas. Even though there are only 2 diagnosed cases in the U.S., there's a very high sensitivity to this. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
With so many firms posting earnings over the next few weeks, which ones have historically gotten the biggest bump up or the biggest slide down after reporting? Dominic Chu takes a look.
Earnings reports often drive volatility for the companies reporting. Among the best performing stocks in the S&P 500 on earnings day is beverage company Keurig Green Mountain. Over the last 8 quarters, the maker of single-serve coffee pods and home brewing machines has risen an average of 12% in the trading session immediately following its earnings report. It was helped along by a huge gain earlier in the year after announcing a big investment by Coca-Cola alongside its earnings report. Among the worst performing stocks is office supply retailer Staples, which has fallen an average of 6% after each of the last 8 earnings reports they've had. While those 2 companies are among the most volatile, it's the bigger sectors and stocks that will get a lot of attention this week.
If you look at the way the S&P 500 is kind of constructed, it's financials, infotech, and consumer discretionary. Every one of those is expected to have very powerful double-digit earnings growth in the next quarter, which will be kind of a really perfect situation for a broad-based, strong market.
Tech and financials are especially important because they are the 2 biggest sectors in the entire S&P 500. Large tech companies like Intel and Google, as well as banks like JP Morgan and Bank of America, could help set the tone for the rest of earnings season. Each reports earnings this week.
Earnings do matter, and they matter greatly. So I think it is something very important to watch, not just the earnings as they were for the third quarter, but what the companies propose for their outlooks year-end in 2015.
Many experts believe that earnings growth will be there, but whether it's enough to carry the entire market higher remains to be seen. Bank and tech earnings could go a long way in shaping things over the next few weeks. For Nightly Business Report, I'm Dominic Chu.
So how much of an effect will earnings have on this already volatile stock market? Let's get some thoughts from Joe Duran. He's CEO of United Capital Financial Advisors. Joe, as between the actual numbers and as opposed to what CEOs may say about the future, which has the greater potential to shake the markets over the next 3 weeks, the numbers or the words?
By far the words. I think what you'll find is people really don't care about what's been because it's been, and care a lot about what will be. And the stock market is a gauge of the future. So absolutely, what they say about the future is going to drive what happens for the next month or so.
Joe, tell us a little bit about these two big sectors that we're going to be hearing from this week. The financials, where we have Citigroup and JP Morgan reporting. We have technology. Intel is just one of them. What are they going to tell us about the health of these sectors and the health of the U.S. economy?
I think what they're going to tell you two things. One, are they going to use all of the new macro things that have been happening from Ebola to oil prices to the collapse, the increasing dollar, as an excuse to prepare people for bad news? That's the one big concern that everyone has. And second, are they going to sell through it? So the banks, they've had a very interesting interest rate environment. If they've been hedging in the wrong way, that's a problem. Intel derives half its income from overseas. The rising dollar could have a big impact on their future sales. So what they say about those two things in the future are going to have a big impact on how the market reacts. So those big bellwethers, how those CEOs react to these big macro changes is going to be very telling of whether we should worry about the next earnings report.
So is the market vulnerable? Let me pose it this way. Do you think that the CEOs will be very cautious in their forward guidance because of all the things you just mentioned?
I absolutely think that they have reasons and ability. And remember, CEOs like to outperform.
Sure.
And so if they have a good reason and a good set of excuses, for example, Intel could very well say the weakness in China and everywhere else allowed us to hit the numbers, and we expect to hit them in the future, but open the band for a possibility that there might be some surprises that are not positive. That tone, I think what you're going to see is a wider range of possible outcomes. And as you become less confident in the outcome, you become less certain, you get higher volatility. And that, I think, is what we're seeing now in the market.
Do you think investors are really going to be paying attention to what these CEOs are saying, in the sense that they already know that Europe is a problem, they already know China is weak, the details from each individual company, does it really matter that much, or is that already priced into the market?
I think a lot of it's priced in. That's what we've been seeing. But I think you have to remember, we've had this very big stealth correction. The Russell 2000, the smaller companies, already down 13, 14%. The big cap names have held up really well. And what we're going to see now is, how big is the impact going to be across, and are we going to have the first time in 4 years a 10% correction? I think earnings matter a lot. The words of the CEOs matter more. What the Fed is doing is even more important, and what actually happens with the economy is even more important. So all of it's intertwined, and we're at an inflection point clearly with the Fed stepping away, where earnings have to be able to keep up even with the Fed stepping away.
You pose the question, are we going to have a 10% correction? Where do you stand on that? Is that the next big headline for us?
I think it's going to be very odd if we don't get to 1,800 on the S&P. I think it's a natural progression point. There's a lot of support there. So my suspicion is we'll be probably flat by year end, which is not anything anyone wants to hear, basically slightly up single digits, but the volatility will be higher. And what we tell everyone, especially our most, we take care of our clients' entire net worth, so we tell them, look, we've had an incredible Goldilocks environment where the economy's been okay, stocks have done great, the Fed's been there to protect us, the Fed's stepping away, we're going to go back to a normal environment, 10% declines every couple of years. We've had 4 years since we've had one. That doesn't mean you should go to cash. it just means you should be prepared for it in your portfolio.
All right, Joe, very clear. Thank you very much. We appreciate it, as always, you're being with us. Joe Duran of United Capital Financial Advisors.
Well, one of the sectors responsible for some of the sharp losses in the NASDAQ lately, semiconductor stocks. The S&P Semiconductor Index has tumbled more than 16% in the past month alone, putting the sector in correction territory. Morgan Brennan joins us now from the NASDAQ exchange with a closer look at this key sector. Morgan, just start off by telling us that, they've fallen. Why have these semiconductor stocks fallen so much since their highs in September?
It's a great question. Well, semiconductors have dropped dramatically over the last month, but really we've seen the lion's share of those losses just in the past week alone. And this is on the back of Microchip Technologies. This is one of the smaller semiconductor stocks in this space. Relatively speaking, it's got a $9 billion market capitalization. The company coming out last Thursday and warning on revenue for the third quarter, citing weaker demand in China, and the CEO saying that the overall industry is on track for a correction, on track for a pullback. That has sent all of the semiconductor names, all of the chip makers down in response to that, including Intel, which is reporting tomorrow. That's down another 1% today. That's down nearly 8% in the past week. Investors are going to be watching that very closely because of those comments last week.
Morgan, why should investors watch semiconductors as opposed to any other industry?
Well, semiconductors, we're talking about the chips that get sent out and put into other items, other industries, appliances, smartphones, PCs, autos. So September is the peak season for the chips and for the semiconductors. When you have a quote-unquote bellwether like Microchip Technologies warning on revenue at this time of the year, it becomes very worrisome that we could be seeing slowing global economic growth. That's something we've been talking about, what we've been seeing with the larger stock sell-off. So when you see some of these companies start to come out and report weaker than expected earnings, the effect there could be that we're going to see similar impact on other technology companies, on other industries as well.
And so I guess you're saying that this is going to have an impact on the broader market as a result.
That's the worry. Wedbush analysts came out and said that whenever Microchip comes out and reports any kind of guidance, that they are correct 70% or more of the time. So that's definitely something to watch in technology, and that's definitely going to be something to watch in these other industries, the smartphones, the autos, appliances. So we could be seeing a canary in the coal mine, but it remains to be seen with earnings.
Okay, thanks a lot, Morgan. Morgan Brennan at the NASDAQ market site.
Well, it wasn't a very big decline, but the price of oil did edge lower again today. Domestic crude closed 8 cents a barrel down. That's its lowest level since December of 2012. Those lower oil prices driving gasoline prices down again. According to the Lundberg survey, prices at the pump fell 12 cents a gallon over the past 3 weeks to a nationwide average of $3.26 a gallon for regular. That's the lowest in a year. And it's those falling energy prices and the potential for deflation that is grabbing the attention of central bankers from around the globe. But what exactly is deflation, and why are so many experts so worried right now? Steve Leisman explains.
Global central bankers are starting to worry about inflation coming in lower than their 2% target. Right now, it's a problem of disinflation, or a slowing in the rate of inflation. But the real concern is deflation, outright declines in prices. In a rare interview, Bank of England Governor Mark Carney said low global inflation would play a role in making monetary policy, and that could mean a more dovish outlook for interest rates in England.
There is weaker global demand relative to global potential that is producing a very benign global inflationary environment, and that's something certainly we do take into account.
Why are price declines a concern? First, it's tough for central bankers to fight. They know how to battle inflation by raising interest rates, but getting out of deflation is harder since they don't like to cut interest rates below zero. Second, in deflation, people hold off purchases because they think goods will be cheaper tomorrow. That reduces overall growth. Finally, asset prices and wages can fall in a deflationary world, along with consumer prices. If wages fall faster than prices, that means standards of living decline. U.S. Federal Reserve Vice Chairman Stan Fischer added his concerns over the weekend about the negative impacts of too low inflation and economic troubles overseas.
If foreign growth is weaker than anticipated, the consequences for the U.S. economy could lead the Fed to remove accommodation more slowly than otherwise.
Right now, the source of lower prices is the decline in oil and other commodities. But the worry is that it's not from too much supply, but from too little demand caused by weak growth around the globe. For Nightly Business Report, I'm Steve Leisman.
It's not just central bankers who are concerned about falling oil prices, but also oil producers. And that's creating a divide among members of OPEC, the global cartel. Jackie DeAngelis has more.
Oil prices continue to slide on concerns about global growth and a market that's well supplied. But in recent weeks, many have been questioning how low oil can go before producers are squeezed. The thought was that OPEC might make a move to reduce its supply to the market to bolster prices when it meets next month. But the chatter out of conversations this weekend, after Venezuela called for an emergency meeting, indicates that the cartel isn't making any rash decisions. Middle Eastern OPEC members have a high cost to produce, many in the triple digits. And with the price below $90 a barrel, some are already feeling the pinch. But according to reports, Saudi Arabia, one of OPEC's most outspoken members, is aggressively courting new customers in Europe and is comfortable with the drop in prices.
What it signifies to me and other traders on the floor is that Saudi Arabia is taking a every member for himself mentality. In other words, we don't really care about what we're producing. What we do care is our market share, and we want to keep it. And it also signifies to me that they have very little control or no control over all the non-OPEC oil that's being produced around the world.
Traders tell me there's no need to panic at the moment. They recall when crude prices dropped from $140 to $33 in 2008 because of market uncertainty and dollar fluctuations. They say break-even prices were equally as high then, and we're a long way from 33 right now. But still, some look to crude pricing as a leading indicator of the overall economy. Crude's fall could mean worse things to come for the stock market, which has already been jittery. For Nightly Business Report, I'm Jackie DeAngelis.
Still ahead, the big change coming to the department store, JCPenney, and investors react. JCPenney's long search for a new chief executive is over, and that is where we begin tonight's Market Focus. The retailer has named Marvin Ellison, a Home Depot executive, as its new CEO. He's going to take over in August 2015 from the interim chief, Mike Ullman, who agreed to come out of retirement to help the company rebuild itself after Ron Johnson was ousted from the top spot after he was recruited from Apple. Shares were off by 3 cents. They closed at $7.09. Canadian Pacific Railway approached CSX last week about a possible merger, this according to multiple reports, but CSX reportedly rebuffed that attempt that would have united two of the world's largest railroads. Shares of CSX popped almost 6% to $31.70. Canadian Pacific fell by almost 2.5% to $184.97. Another deal to report, General Electric will pay about $1.8 billion for the helicopter leasing company Milestone Aviation. The Dublin-based outfit will expand GE Capital's aviation services unit, which rents planes and offers loans for buying aircraft. Shares of GE were off 1% today to $23.95. And Boeing announced a massive order. An Indonesian airline bought 50 jets from the company worth about $5 billion. Despite that, Boeing shares down about $1 at $120.45.
Fiat Chrysler made its return to the U.S. stock market today. The newly merged company stock began trading on the New York Stock Exchange, part of an effort by CEO Sergio Marchionne to elevate the company's profile globally. Marchionne says this day has been a long time coming, and he wants to prove the naysayers wrong.
Most people believe that the thing could not be resurrected and recovered. And we look at reality today, 10 years after the Fiat recovery story, 5 years after Chrysler. These are both vibrant organizations that have come back.
Not much vibrance in the stock on its first trading day. It lost about 1% to $8.92. Shares of Lithia Motors plunged after the auto retailer issued an earnings warning. The company said a drop in used car prices hurt its third quarter profit, and it also cut its fourth quarter earnings forecast. The stock was down about 21%, closing at $64 a share. And Luxottica, the maker of Ray-Ban and Oakley sunglasses, saw its shares drop in today's session. The company's chief resigned just after 6 weeks in the job following the abrupt departure of the company's longtime CEO last month. Shares fell 9% to $47 and change.
Well, it's not your typical technology conference, but Dreamforce, billed as the largest software event ever, boasts a long line of celebrities and entertainers to drum up support for the cloud computing services at the tech giant Salesforce. Josh Lipton has more.
Don't let the crowds and rock music fool you. This isn't a music festival, it's Dreamforce, an annual event in San Francisco where Salesforce CEO Mark Benioff and a who's who of celebrities entertain over 100,000 people for 4 days. There's concerts, lectures, fireside chats, and of course a lot of networking about the trend of cloud technology. That's when companies offer web-based solutions sold as subscriptions rather than licenses. Businesses are moving their IT services to the cloud because it can help them save costs and streamline operations. Salesforce is a leader in the cloud. The stock hasn't done much over the past 12 months, given concern about its valuation, but bulls remain optimistic.
It's our top pick, outperform rating. We think the stock is extremely undervalued here, and there's really a few reasons why. One, they're the largest cloud company. They continue to be very innovative. You saw a new product announcement today, Wave. It's their big data analytics platform, massive expansion of their end market, several billion-dollar opportunity, and we think it's really a transformative move for the company. On top of that, they're delivering margin expansion. We believe they're going to continue to be more and more profitable. That's a big positive for investors as well.
Salesforce competes against established players such as Oracle and SAP, as well as smaller rivals like NetSuite. There's a lot of money at stake. Global spending on public cloud services reached $46 billion last year, according to research firm IDC. It's expected to be more than $107 billion in 2017. There are all kinds of celebrities here, from Hillary Clinton to Al Gore, and musicians like Neil Young and will.i.am, representing just how big and dynamic the cloud industry has really become. For Nightly Business Report, I'm Josh Lipton in San Francisco.
Coming up, home sweet shipping container, why architects are now thinking outside the box and making homes and business offices out of unlikely materials. But first, the bond market was closed for Columbus Day. Here's how commodities and currencies performed. Fidelity Investments has a new CEO, and it didn't have to look very far. Abigail Johnson will take over the position from her father, Ned Johnson, who's 84 years old and has been CEO since 1977. Abigail Johnson is currently president of FMR. That's the parent company of Fidelity Investments.
Thousands of shipping containers enter the U.S. every day, and only a fraction of them go back to where they came from. Instead, they sit in shipyards, idle and empty. But a new trend in real estate is already changing that. Developers are using these containers for everything from retail shops to residential apartments. I'm not kidding. Diana Olick has the story.
It's a beer garden, a clothing store, a bathroom. It's anything the designers at Charlotte-based Boxman Studios want it to be. But first, it was a shipping container that came to the U.S. on a boat but never went back.
Give us the possibilities of what these things can become, because right now they kind of look like Lego pieces.
Well, and that's a great description. It is a Lego piece. So how do you put them together in different capacities?
With a lot of imagination and a blowtorch.
What we built the company on was immersion marketing experiences, and what that means to us is creating environments that are iconic for the brand partners.
Working with brands like Hyundai, Under Armour, Nike, Boxman Studios repurposed container carcasses, breathing new life into them as mobile marketing spaces. Hyundai's Man Cave, for example, at sporting events. Then they built on that. Retail, restaurants, apartments, even a hotel could be in the works.
What's tricky are the zoning regulations because there really aren't any on a national level. Developers need to work within each municipality, which could in turn label the containers mobile, modular, or permanent construction.
The real trick is going to be not to disguise it with some sort of phony traditionalism, but to begin to embrace them and to begin to see all the variations that can happen.
Price designed this container apartment building near Catholic University in Washington, D.C. It took just 4 months to go from 18 metal boxes to home sweet home for these students.
First, I thought it was a little crazy, but when I saw it going up, I thought it was pretty cool. A lot of people have been coming by. I mean, even the nun from the convent down there came by and blessed our unit the other day. There's a lot of buzz about it.
This is prefabricated housing probably at its best because the strength in these things is probably 3 times what a standard steel building would be,
which could make them ideal for disaster relief. Just another idea in the works as these visionaries mold idle metal into prime real estate. For Nightly Business Report, I'm Diana Olick in Charlotte, North Carolina.
And finally tonight, the winner of this year's Nobel Prize in Economics is Jean Tirole of France. The Royal Swedish Academy of Sciences, which awards the Nobel Prizes every year, cited Tirole for his explanations in helping to understand and to regulate industries that have just a few powerful firms and showing how governments deal with mergers, cartels, and monopolies. The award and its more than $1 million prize will be presented in Stockholm in December. And that's Nightly Business Report for tonight. I'm Susie Garrow. Thanks for watching.
And I'm Tyler Mathisen. Thanks from me as well. Have a great evening, everybody. We'll hope to see you right back here tomorrow night.
Nightly Business Report has been brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
I'm Susie Garrett with a Nightly Business Report news brief. Columbus Day was no holiday for investors. Stocks sold off again and hard again. The usual stew of recent worries gets the blame. Slowing global growth, ISIS, Ebola, and now corporate earnings. They start flooding out in earnest beginning tomorrow. The Dow tumbled 223 points, the Nasdaq down 62, and the S&P lost 31 points. The blue chip Dow stocks are now at a 6-month low. The Nasdaq and the S&P are at 5-month lows. JCPenney has named Marvin Ellison, a top Home Depot executive, to take over as CEO in August of next year. And mutual fund giant Fidelity Investment also named a new CEO. It's Abigail Johnson, a Fidelity insider and daughter of the firm's current chief executive. Be sure to tune into Nightly Business Report right here on your public television station.